So we predicted we'd be in a recession. Let's speed it up a year and a half, 2 years later, and let's see where we're at today. And what I'm doing is I'm reading a lot of reports on industrial real estate. Now, why is that important? What you notice is companies like Amazon over the last 7, 8 years started building their own plants over here in their own warehouses. So they have the goods here. Because most people after this COVID, where are they doing their shopping? All their pharmacies, they're doing it online. How are they buying their clothes? They're doing it online. We have a big shift in the global and the US economy. What is that shift? Well, we notice when China keeps shutting down their economy, they're affecting everybody globally, supply chain. So all the blue chips around the world are coming into America, including ours. And what are we doing? You hear Tesla spending billions of dollars. You hear the chip companies like Intel spending billions of dollars. Oracle, Facebook, Google, all these companies, Nike, Whirlpool, they're all moving into the US and building their own warehouses, or they're partnering up with big companies that are building the warehouses. And that's where we're seeing the biggest returns in the real estate market. When you print money, real estate historically goes a lot higher. It's all time constrained and it's causing massive inflation. But we believe in the next year to 2 years, when they start setting up a lot of the shops and leaving China and bringing back a lot of our business here, and the chips are made here, the sneakers are made here, the appliance companies will be made here. That means their biggest cost for most businesses is the transportation costs. It's 65% according to the big boys. All of the top companies, I'll tell you, it's 65% just in costs with the transportation, moving it from China, from Japan, from South Korea, back into the States. But if they build it here in the States and they build it to perfection here, that is disinflationary. So I believe short term, with all these supply chains, we're gonna have problems with inflation on and off, on and off. And that's why you got Mike Wilson, Morgan Stanley, I think he was the #1 analyst out there, just said, hey, I believe this market's gonna go down another 20%. So I do believe this inflation will be rolling over the next 2 or 3 years. But if our businesses come back to the United States, they build a lot of these industrial complexes here, they build a lot of the warehouses here, and they keep everything built here inside the United States, that's disinflation, and computers are moving. Artificial intelligence is just getting better and better, where you put your information in and it'll spit out a whole report for you on almost any topic, from your kids playing soccer to us building, bombs in Russia and Ukraine. You're going toward the election year again. When you get into the election year, historically, markets in the third year, right before the year they run for election, historically the markets went higher. Now there's no guarantee they're gonna go higher this time, but the bottom line in the short term, we believe the market's gonna come down because the inflation's gonna be stubborn. And we believe going into the summer, we think the Fed has to lay off these hikes of interest rates.